Okay, so the year of 2022 is over. The S&P dropped nearly 20% right now. It is a crystal clear bear market. So what's next for us? What to expect next year? Could we possibly drop to even lower price levels? Is there another imminent crash ahead? Well, maybe, and if we learned anything from 2022 is that yes, we could easily drop to lower levels. In this video, I will describe the most important key points you should pay attention in order to prepare yourself if the market is about to collapse again. Welcome to the Finance Hydra channel. My name is Nathan. Let's analyze the S&P, the other indices, starting with the S&P in the daily chart. Let's do our multiple time frame analysis on the S&P first. First, the S&P is just dancing around our support level at 3818, which is this gap area over here. Now, we are just dancing around, moving erratically. There is no clear reaction, there is no clear bullish reaction or bearish reaction right now. We are just dancing, moving sideways. This is it. In the daily chart, there is nothing clear right now. In fact, it is a little bit messy. I don't see any technical reason that justify a buy or a sell sign in the daily chart on the index right now at this moment. If we trigger this above the stomach candlestick pattern over here from yesterday, what is an above the stomach candlestick pattern, Nathan? If you check Bukowski's website, you'll see it is a bullish reversal, which works as a bullish reversal pattern 66% of the time. However, the pattern was not triggered, so we can't say it is a bullish reversal right now at this moment. If we actually triggered this bullish sign, I do believe we could easily retest the 3911 in the daily chart in the midterm. And this is it. This is our main resistance level in the midterm. And the trend would still be bearish. We are still in a bear trend, so watch out for this. Only if we break 3911, I see the index retesting again the 4K. In this scenario, I think we're gonna turn a little bit more bullish. I think we can avoid a sharper correction on the index, but still, in my humble opinion, we gotta break the 4K in order to trigger a better, more robust bullish structure, and I'm gonna describe more this structure in more details in the weekly chart. Because in the weekly chart, let's be honest, we are totally bearish. I mean, if in the daily chart we are bearish, in the weekly chart, we are, I don't know, polar bearish, all right? So we are extremely bearish over here. In addition, we see this descending, broadening wedge chart pattern, and four times the upper line worked as a resistance for the index. A few weeks ago, it did this candlestick pattern over here. Call it just like we saw an above the stomach candlestick pattern in the daily chart. This is a below the stomach candlestick pattern over here. See, let's take a look at Bukowski's website again. See, it is the exact same pattern over here, and this time it did work as it was supposed to work. It did work as a bearish reversal, and it does work as a bearish reversal 60% of the time. So okay, it was a bearish reversal structure. We drop it just below, just after retesting the ceiling of this bear trend over here. So this was a classic sell sign. Right now, we are retesting the 50% Fibonacci's retracement, and if the index is about to react, right now is the best time for a reaction ever, because we are just above the 50% retracement. Last week, we did a doji candlestick pattern, almost a doji candlestick pattern. We are trying to react over here. So if the index triggers this above the stomach candlestick pattern, breaking the 3911, I do believe we have decent chances of retesting the upper line or even breaking this upper trend line over here. If that's the case, the index might avoid a more catastrophic bearish structure, because we are gonna do a higher high, higher low. This is what the index has to do in order to avoid a sharper bearish correction. Okay, we don't see higher highs, higher lows since 2021. Okay, so yes, right now we gotta do that in order to reverse. As long as we don't, well, the trend will just remain bearish, and well, all that we should expect is that the index will just drop to lower levels. All right, so as long as we don't react properly, there is no bullish sign right now at this moment. In fact, there are only bearish structures right now. There is not a single bullish structure. There is not a single bullish pattern confirmed yet. So pay attention to this. Pay attention to this support level in the weekly chart right now. Now, you may say, oh Nathan, but it is quite easy for you to analyze the chart right now because we are way past these points. Well, but I do analyze these charts over here every single day, so subscribe to this channel, click on the like button to support me, and if you want to trade with me, join the Market Dive Daily newsletter, or if you want to check my personal portfolio, check the Finance Hydra portfolio. Join the top 5% of traders that can actually make money and beat this market. So our performance is quite good right now. I think you guys are gonna be pleased with what I have to offer to you. Now, back to the S&P. Okay, so it is bearish in the weekly chart. What about the monthly chart? The long-term perspective. In the monthly chart, this is quite impressive, and some people don't believe in Fibonacci. Guys, Fibonacci is everywhere. It is around the nature. It is in the flowers. It is in the shell of what is the name of that sea bug. It is in the human body. It is everywhere, and it is in the stock market as well. See, since we found a top in 2022, 2021, over December 2021, we dropped to retest the 38.2% Fibonacci's retracement, and we bounced it from here. We actually we respected the 38.2 retracement. We bounced it again just to drop another time, this time ignoring the first retracement and respecting the next one, the 50% Fibonacci's retracement, just to bounce again. In addition, the 50% retracement is this support level over here we found 2 months ago was precisely a resistance level from September 2020. So this key point is extremely important for the market. Now, we are doing another bearish structure. We are doing a bullish engulfing candlestick pattern in the monthly chart. After bouncing again from the 50% retracement, now here things get a little bit dangerous, and a bearish engulfing, well, bearish reversal 79% of the time. So it has quite high chances of resuming the bearish sentiment over here if it gets triggered. So what could potentially trigger this bearish engulfing, Nathan? Well, first we gotta lose the monthly low over here along with the 38.2% Fibonacci's retracement again. So if we lose this dual support level, then I believe the S&P could again drop to lower levels and retest the next retracement down here, which is at 3,200. What's even more interesting, the 3,200 was a support level from September 2020 as well. So see, all of these key points in all the time frames, the S&P is speaking the same language. These are the most important key points we should pay attention from now. If you are aiming for the long term, well, you should easily, you really should pay attention to these key points over here, to the monthly low, to the 38.2% Fibonacci's retracement, which so far it seems the S&P wants to respect this retracement, but honestly, it is a quite random chance of going up or going down according to the daily chart. If you look at the weekly chart, in my humble opinion, if we lose the 50% retracement, I think we're gonna drop to lower levels. So guys, if you are bullish, pay attention to this purple trend line. If you are bearish, pay attention to the 38.2% Fibonacci's retracement in the monthly chart. Okay, these, in my humble opinion, as a retail trader just like you, I'm not an expert, I'm not a guru, I'm not a professional of this industry, I am a retail trader. In my humble opinion, I think these are the most important key points we should analyze from here. And again, if you are still here, remember, my dear friend, click on the like button, because why not, right? It is for free. You're just gonna spread the joy for free. Subscribe this channel to keep in touch with my data analysis, daily insights. Have a great holiday, my dear friends, and a happy new year. Next year is gonna be promising. I firmly believe next year is gonna be very, very good. Thank you very much for your audience, my dear friends. Stay safe. Farewell.